There it goes.
And we're starting. You can see it.
I can see it.
All right.
All right. Well, so episode 1 officially playing with the new toys that Nate got for.
Yeah, episode 1, we got some actual podcasting equipment.
All right.
It's neat. And so if it sounds like crap, it's because it's our first time using it.
Well, it's first of hopefully many episodes we'll be able to do. I think based off of what we've done over the last year, it's provided some framework or groundwork, I think, moving forward. But
Yeah.
also a lot of things in my mind that will allow for future growth of the wallets, we'll say.
I mean, that's the ultimate goal, right?
Yeah, everybody make money.
Make the wallets bigger. Let's make the wallets bigger. Um, well, I think we should start. Let's just start with a year review of what 2020 did for us. Like, uh, where we started out, it was a weird year. Like, and we're gonna stick markets. We're not gonna get into all the political, the COVID. I mean, we all know what happened. It's always there, but let's stick to the markets. I mean, obviously, where they impacted was pretty big, but we don't have to go in depth with the COVID charts.
No, because that's a kind of one of those events I think that you can't really plan on happening repeatedly over and over again. Is every new sickness that's out there going to create more or less a black swan event that created a buying opportunity that I don't know that we'll see again. I don't know. I can't predict that, but I think for 2020 in review, where it started out, if we were looking at the start of the year, I felt coming into 2020 that we were going to have a pretty positive year. In fact, I think I posted that I felt the S&P would get up to about 3,300 from the start of the year. The Nasdaq I thought would get to about 10. Was my initial guesstimate based off of starting out the year. Where did we start?
We opened was on the Nasdaq was 90.39.
So I was picturing about a 10% overall growth for the Nasdaq, the S&P, and the Dow altogether. I was picturing a 10%. So getting up to about 10K for the Nasdaq and 33 I want to say for S&P, and I'm just going off of memory, and then the Dow I think getting up to or touching close to about 30K. I think that would be my stretch on those. And they were marching that way to start the year.
Yeah, you almost hit your points like in April or sorry February.
Yeah, middle of February we were cruising right along, and I was thinking to myself that we'd seen this type of growth and continued march. It was a continuation from 2019, basically September up through the end of the year. We had just this amazing march that happened. The all the numbers were climbing up and away. But I didn't think it was sustainable at the pace that we were going to end 2019, and certainly going into 2020. I was hopeful that it would go up those 10% by the end of the year, but I did not see it continuing the march like they did. And then
and, and then it did.
and then it did, and
Well,
then the rug got pulled out from everybody.
the rug, yeah. The interesting part with the rug was, I mean, that was one of probably my better calls that I've ever had overall in all markets, the traditional market and Bitcoin, because as it came through, I'm looking at DJI here, but I don't. Let me go to SPY because the Dow I don't watch as much as I do Nasdaq and SPX. So as you know, the SPY follows SPX pretty similarly. So for me, when we were, let me zoom in on the time frame. So as we were coming through in February, late February, everything was telling me that I needed to kind of start to get out of some of my holdings. I got stopped out on a few as it started to tip over the top here in the end of February, but it just it reminded me of this little dip beforehand. And did I know that we were going to go down super far? No. I mean, we knew COVID was out there. What it was going to be, we didn't know yet. But overall, I started to tighten my stops. Some got stopped out. Some I just closed out. After this first big dip here on the 25th of February, I know I was pretty much out of everything. Bitcoin was looking, and I was running Bitcoin was like kind of my indicator of a lot of things that was going on too, and it rolled over almost the same. And that's the weird part because they were all rolling over prior to this. And I don't know if you remember there was a lot of news that came out on some of these politicians that had insider information of COVID, that they were selling their stocks, like pre-sell before the big dumps. Like they were selling, millions of shares and millions of dollars worth.
Yep.
Because they knew what was going on before we knew, before the public got the information.
Yep.
And so I kind of think that's what was, pushing a little bit of this rollover, or it just technically it was, getting up there. So for me, I got lucky because the majority of it, I was getting out of it, but, tightening those stops as it started to roll over. That obviously was a huge move as it just rocketed down. Once it rocketed down, that's where your brilliance came in.
It was more or less a combination of us recognizing that there's going to be a huge reaction to this, but with every huge reaction, there's a huge opportunity as well. And for me personally, I'm never going to capture the bottom. I'm never going to capture the top.
You were close, dude.
I was
you
close.
were close.
I was
like,
close.
come on.
But it's one of those things where it's like, okay, you could buy stuff on sale for, if you're seeing a 25-30% drop in the regular markets, in those leveraged ETFs, you're seeing a 70, 80, 90% drop overall.
Yeah.
Which, are they ever going to go to zero? I guess theoretically it's possible, but for when you're talking about broad holdings of having an underlying, your underlying stocks that are part of it,
Yeah.
are the underlying stocks that are part of the overall leveraged ETFs going to go to zero? No, they're just going to reverse split back. They'll eventually come back up. How long will that take? I can't tell you. Nobody could really
Nobody
tell
can
you.
tell you that.
No, you're never going to know exactly how long it's going to take to recover it. But for what we were looking at, I was thinking, hey, we got a year, maybe 2 years of these things coming back. And if they come up from the 70, 80, 90% bottom where we were looking to get in, or where we got in, that was going to create some growth potential that was far beyond any other options that were out there for us at that point in time. So
now, do you remember I'd have to look at the timeline, the calls that you made to get in? And, I was fine with them. I wasn't, all my indicators told me just kind of hold off. There might be another push down, but, you were ready to rock and roll. Do you remember if there was the stimulus that was started to go out at that time, or was it just before?
I want to say that they were in the talks of all that stuff. It was, we made the purchases, I want to say about the 17th of March. I want to say the real stimulus movement was starting to happen towards the end of March, 1st of April. I think they were talking about it, but they weren't necessarily voting on getting it all through until first part of April.
Yeah, I want to say that April 6th, this candle wick right here, I think was like the big, this dip down in this little area here. Because I remember this coming up.
Yeah.
This is where I was, because there was no stimulus talk. There's none of that was really, or nothing passed. And I was looking for the dead cat bounce. And so as it started to roll over, I was kind of tapping myself. I was feeling pretty good. I told you it's going down again. And then once those stimulus talks came out, it just, or they passed it, is like the first one that came through. It was like just ripped up. And once that hit, after that, it's just to the races. Like there was nothing stopping it.
Yeah, once you basically give cash to people to utilize how they want, it's going to sustain growth in a short order. We're going to see that card be played, I think, in the future, multiple times potentially, as we see these events start to happen again, or if they ever do happen again. I just personally felt that modern monetary policy would dictate that they aren't going to let the markets fail completely like they would in the early 20s, 30s, or however you want to say it. Yeah, we're going to get these pullbacks. We're going to get the 30, 40%. I don't know that we'll get above 40% again with an overall drop in the markets without major intervention. And it certainly wouldn't happen over a long drawn out time frame. You would see it in these shorter time frames. You're going to see the Fed, you're going to see the government step in to provide some type of either stimulus or some type of action, whether that be 0% interest rates or negative interest rates, or backstopping more or less the purchasing of bonds, corporate bonds across a broader scale, private lending directly to the Fed. All these moves that they made, buybacks,
quantitative easing.
Yeah, all these and I don't think we've fully seen all of the tools in the tool chest be used as of yet. And I think they're still going to be implementing more coming into this upcoming year. But I would say, as a review for what we did for 2020, we're seeing that yes, those people that didn't lose their minds and just completely sell at the bottom and swear off buying stocks for the future probably did all right.
Yeah.
I know for myself personally, I on the way down about March April timeframe was when I really had to evaluate what am I holding and why am I holding it. And
Yeah.
are there other opportunities that are out there? Can I dump something that might be down just 5, 6, 10%, and then get into something that's down 90% or 80%? Something that definitely had more upside potential versus, if you just hold on to something that's down 5 or 6%, and it's going to come back up, are you only going to see an upward swing of 10, 20, 30% as opposed to if you bought something that was down 90% or 80% or something along those lines, 200, 300, 400% gain. And those things are important to kind of evaluate, and that's something that you have to answer for, that I had to answer for myself, but each investor has to answer for themselves. What if there's a major event happening, how am I going to respond to that? And
Right.
2020 really amplified how do you react to a really bad case short-term scenario.
Well, that's one of my phrases I live by. It's not the events in your life that define you; it's how you react to those events, right? So it's like there's always something that's going to happen, always in your life, whatever it is. And this is the market. The market, in my eyes, the reason I love trading it and everything else is it acts like life. It's psychology. You see these things that are happening over and over, and how people are reacting to it. So how do you react to it? Like that's a good question, like to ask anybody that's looking to get into it. We have our little group that's going on in our Discord. It's like, what do you got going? Why? And I ask it all the time when people are posting like, oh, I bought XYZ stock.
Mm-hmm.
Why'd you buy it?
Yeah.
I want to know why. I want to see what is it that you're reading, what is it that you're seeing that's going to bring you that conviction.
Yes.
Is to put the money down.
Yeah. Because
And
you got to be confident. You got to have that conviction. You got to have confidence in what you're doing moving forward. And even if it's short-term confidence of being like, I see a chart. In your case, you're more a chart or technical analysis type of person. And so if you see something, having that confidence that you say, hey, you know what? 9 times out of 10, this scenario plays out to this. Well, that gives you the confidence to be able to make that decision and have that conviction moving forward. If 9 times out of 10 you're right, hey, you're well in the money, as you know.
Well, and I want to, one of the things you said when you were picking some of the stuff that you were looking at getting into, it wasn't one of the qualifiers was it had to be down a lot. Like,
yes,
okay, what got hosed on this entire drop? But the other was it had to have good fundamentals behind it. We put in a lot of those ETFs, the triplicate ETFs that were in there, but it was, what's going to come back from this? And you start looking at, interest rates are going to zero. Well, what was our best performing stock almost, or ETF that we bought was, well, not now, but it was up there, was Nail.
Yep.
Right? Well, interest rates, low interest rates, that's a great one. People are going to be building, remodeling, putting all this stuff in together. It's like, that was an obvious answer. That was a great one. So that was good. I mean,
short term, that was I would say probably in that 3 to 5 month time frame, Nail really took off in that. And with any of them, once you have that and you have that feeling that it's going to go somewhere, you always have to keep on watching it because some of those are going to respond really quick. They're going to go up a huge amount. Go from, I think it was down at lowest, it was 5 and it shot up to 60 something. So that's quite a significant jump. But does that mean that you sell at 60? Does it mean that you dump it at 30? Does it mean that you got to constantly be evaluating what are your time frames that you're looking at?
Yeah.
Does it have momentum moving forward? Well, the interest rates haven't gone up. Real estate continues to climb. People continually look to spend and improve all across the board for their homes.
If their home is going to increase in value and they have low interest rates, what are they going to do? They're going to pull out a home equity loan so they can build that shop, or they can do the add-on or whatever. Put a deck on it. It doesn't even have to be big, but they're going to use that money for that.
Yeah.
It's a great one. And yeah, you were right. 477 was the low. Yeah. And we averaged in around 933, which is pretty damn good considering that it's at today at $48.
Yeah, and 48. I mean, it's very strong for when you look at it from the $9 standpoint. But if you look over across the 52-week range, having it up around $98, I think was the high point that it got during the 52-week range. It still has, in my mind, some room to run potential. Is it going to be 400 or 500% growth between now and the end of 2021? I can't say. I highly doubt it. Will it grow from its current point, maybe 100%? Yeah, it's got a really strong potential to do that based off of what's already been out there and what's been established. I think it can definitely do that. That's not based on anything technical, charts, anything else like that. It's more of just a feel and having that confidence and more of that conviction on, looking at the broader scale markets, the new home builders, which Nail includes a lot of the new home builders, D.R. Horton, Lamar, Toll Brothers. There's a few other ones that are out there that make up Nail as the overall holding. But what you look at is their new home starts when the COVID-19 took into full effect. They weren't seeing a whole bunch of tire kickers. They were seeing a whole bunch of buyers, and their inventory got purchased very quickly and rapidly because people were wanting to capitalize on the low interest rates and locking those in.
Well, yeah, I mean that's what they did. A lot of people did. I mean, I know I think you locked in a low interest rate.
Yep.
Took you a while.
It took me a while, but when you can lock in for a 30-year time frame at 3.25 on a house that you're going to live in long term, it's basically like giving you free money. Why pay off a loan at 3.25 when you can invest it and make 20, 30, 40% per year annually compounding as time goes on? It doesn't make financial sense to me personally to do that. Now, each person is going to have their own justification for what they see. Some people look to be debt free as soon as they possibly can, but that's probably a different topic for a different
I was
podcast.
one of them. I was one of them, and then I took out debt.
Yeah,
and I bought stocks.
Because
made a lot of money.
Yeah, and that's where it comes down to, is that if you could borrow or have free capital to be able to invest and make 10%, 20%, 30%. Now, obviously, you can lose that as well, but in the long run, if you're continually up and you're non-speculative, you could put it in a VOO and get 12% almost guaranteed on a yearly basis.
Yeah.
You put in a VGT, you can get close to 20% guaranteed on a yearly basis.
I don't think anything's guaranteed.
Yeah, you can't guarantee anything, but it's like with anything, you just have to be vigilant enough to kind of look and say, okay, am I buying at the exact high point right now? Yes. Can it continue to run up? Yeah, it can, but probably it might be smarter to pull back, wait for a pullback.
Always better to wait for a pullback.
Wait for a pullback for a point of entry that's going to provide for you some sort of security of being able to say, I don't have to necessarily sell this right now because
right.
I've got some breathing room.
And there's one other thing you have to have when that pullback comes.
Capital.
Gotta have capital. You gotta have the ammo ready for it. So
you're
time. Either selling stuff that you already have in there to redistribute into something else, or you're saving along the way as it goes down.
Yeah.
And I know I've started a new basically way that I manage my own personal portfolio to make sure that I always have capital ready for those dips, and that's something that we can talk about later. Let's kind of finish the review, but let's see, for the rest of the year, obviously it's kind of ripped up. We moved up through. We kind of had the NASDAQ led the way. NASDAQ, yeah. I mean, it just...
And it has for the last, I want to say 15, 16 years. A comparison of the three different major indices, you're going to look at the NASDAQ in comparison year over year is going to... It's been kind of the bellwether, and I feel it will continue to be that strong point that you can look to for the biggest amount of growth amongst the three major indices.
Well, you can look at this one. This is QQQ versus SPY, so it's the DAX versus the S&P. Obviously, the Q is in the front, so it's leading it, and the uptrend, forever. I mean, ever since you can look at the crash, the .com crash. Since then, I guess really 2006 is kind of that consolidation zone at the bottom. But ever since then, I mean, it's just been a steep incline all the way through till look where we're at now, all-time high, right? At that, it's broke through and it's kind of, chopping back and forth. So S&P's tried to catch up a little bit, which it should. I mean, there's still, Tesla being back in there now might help them out but that thing's so overextended. Who knows what's going to happen there?
Well, all those shorty shorts that should have been delivered last year for Tesla. How is anybody to know really what the long-term performance is going to be on any of those explosive stocks like a Tesla or anything else? But they can really drive these conglomerations, these larger holdings upwards if you bundle them together and you're not putting all your eggs in one basket.
You know, we talked about pullbacks in there. I pulled up the SPY chart here, and you can see, you know, a nice pullback is 10%. Like if you get a pullback at 10% on the SPY or Nasdaq or the Dow, that's a pretty dang good pullback, because a lot of your other stocks or your leverage ETFs, again, they're going back 20, 30, 40, 50%.
Yep.
Depending on what it is. In this little run after March, there's 3 pullbacks you got that are close to 10%. That's that you could add to. We were already fully fledged in there from March, so we were ready to rock at that point. This next year will be different.
Yep.
Come March timeframe.
March-April timeframe. It comes back to my own personal investing mindset, is that I don't like paying taxes. I don't think anybody really likes paying taxes, but I especially don't like paying taxes.
They're my favorite.
And so I know that if I exit out of a point right now, there's a certain amount of gains. But if I hold on to it for a year, then I have flexibility to be able to reduce my overall tax liability. And that, to me, is more powerful. That provides an extra potentially 15 or more % on the overall gains of the holdings. And so it's powerful. Every tax savings that you could possibly get provides that future earning potential that compounds long term. I look at the compounding of not only what we've purchased this year, but what we can potentially purchase in the future by having tax savings for holding stuff longer than a year.
The eighth wonder of the world.
Exactly.
Yeah.
And so it's a powerful tool, and certainly 2020 has led for us to be able to have a mechanism to allow for further compounding or further growth potential by just holding it and extending potential tax liability.
Yeah. Oh yeah. I mean, it's and we're sitting in a good spot. So as this came through, there wasn't a lot that we did after the fact. We added a few little holdings here and there, and added to some just as things went along. But we ended the year strong. It's just an uptrend.
Yep.
I mean, it's slow, but it's just ticking upwards. I mean, a lot of people think it's a sideways market. I kind of think that way because we're not getting the volatility we had back in April, May, June, July through there. But you look at it, it's just an uptrend. I mean, even we look at November on, right, where that personally for me makes me think of like a sideways market. I mean, the SPY's at 5.8%.
Since November?
Since November. There's no stimulus out there. There's nothing that's been pushed again. We've got put back on lockdown everywhere, like even more harsh lockdowns than we were at before, but yet it's just ticking up. That residual of that money being in the market is just kind of keeping it going and forward. So, and like you said earlier, I think, as we transition from the year review into what we're looking forward,
Yep.
I think we see the same thing. That trickle effect of what was already pushed out there with the trillions of dollars. What was it, 7 trillion, 8 trillion, or whatever?
Yeah, I think overall stimulus that's out there, some 6.4 trillion up to, who knows? Do you count the new 900 billion in as a part of that? I think it all got approved and signed. So yeah, you got to count that in as part of the 2020 stimulus.
Yeah, I think the 600, as they're saying, it might go out partial of those checks for people tonight. Some of them might hit tonight, but they're still working and trying to get the 2,000, which is great. I think those people need it. I mean, if only there was a way to really get it to the people that actually needed it, and not. I mean, we capitalized on what this brought to us.
Oh yeah,
we were in a very fortunate position that we were able to capitalize on it. There's a lot of people out there that, I know personally, the jiu-jitsu gym that I go to, they're not getting handouts throughout. They got a really good support system there that's helping them make it through. But dang man, this is rough on those small businesses like that, and all this money isn't going to them.
No,
there's trillions that are going to these big businesses that basically it's the bailout that we saw before.
Yep.
So we're going to see more of it. It's not going to change. It's not like old Biden's going to step in there because he's the wind of change is coming. No. It's the same old, but
it's just a continuation of the politics, and we're seeing politics play out right now. You're going to see the politics play out in 2021. But as a part of that, are we going to be more dependent upon stimulus news? What was it in 2019? It was China trade talk news. That was
Oh,
the Trump
every week.
every week. So there's always something that's going to trigger, or that they'll point to the trigger of being the pullback, or that it's
Yeah.
going to actually affect like a 5-10% pullback of the overall indices. Is it real? Is it something that's going to really make me change my outlook? Maybe, but highly unlikely. For a lot of the entry points that we have currently, it would take an awful lot for of a pullback to get back to those entry points. Make me really look at, okay, what do I need to reevaluate long term investment wise, or
Right.
short term, mid term? What type of investments am I looking at? Or is this going to rebound as quickly? I think you're looking at the catchphrase for 2021, at least in the first initial part after Biden gets in there, is going to be, what are these stimulus checks going to look like?
Right.
Are we going to see multiple? Are we going to see 2,000? Are we going to see 1,000? Are we going to see a continuation of this play out 3, 4, 5 times into this upcoming year? Projections are initially saying that our GDP is going to grow if they adjust the $600 stimulus check up to $2,000 stimulus check from a 5.5 up to 6.5 GDP growth, 6.5% growth. So they're already calculating that GDP is going to grow next year, or this upcoming 2021 year, up 5, almost 6%, which is basically rocket fuel.
Yeah, yeah. I mean,
You can't, that growth, that type of growth from where we're currently at, rocket fuel for everybody that's out there. So if we continually provide those stimulus, is that an extra 1%, 2%, 3% that's added for each one of those checks onto our overall GDP?
right.
It's huge. That's how we calculate, well, what can we borrow as a government? What do we see as the overall debt liability that we have? It trickles down to traders. It trickles down to hodlers like me, people that just look for differing entry points. And there's going to be other things that emerge. But right now, I think with us being as close to the all-time highs of current holdings in the leverage funds that I'm looking at, it makes it tough to be or to recommend, hey, buy this right now.
Yeah.
I can't say, oh, buy this one thing right now or buy that one thing. No, it's just kind of I'm already pretty well allocated, and let's just kind of see how this.
Yeah. Oh, and you have your ideas of, and I kind of have it, mapped out in my head. It'll be completely wrong, but like you said, stimulus, they're going to start the talks once it gets in there. They're going to really push for it. We might get one that comes through, or at least a bunch of, momentum towards it. We're going to keep climbing, coming to the end of March, April timeframe. You're going to see, I think, a dip in that timeframe. Yep. Because that was when a lot of people got in, obviously in March to April timeframe, and it's that 12-month timeframe you're talking about. If they can get rid of that long-term capital gains and cash in on some of these stocks, I think we see a pretty decent pullback in that timeframe.
Yep.
And from there, I think that's the buy point, man.
Yep.
Potentially.
It could be. It's all tough to say. I would say that most people are predicting that 10 to 12%, maybe 15% pullback in the overall markets in that time frame, and it would make sense where it matched up perfectly with people that entered into March like we did, needing potential, missing out on the short-term capital gains, but then also being able to cash in to pay for the taxes for April 15th. If people are worried about paying for those at that time as opposed to October. So there's a lot of factors that are there. I think the first 100 days of a new presidency is always interesting. I think we've seen from the beginning of November, for me personally, I know for you personally, we looked at entry points. I personally got entry points at the end of October, first part of November for a couple of holdings that have panned out fairly nicely. And so there's going to be those opportunities again. It's just a matter of how patient can an individual be in looking or waiting for those to come about. We're in the Santa. It's a Santa's push after Christmas, basically. It's
all the stores at the end of the year.
End of the year, everything for the rallies, the stocks. It basically extends from Christmas until 2 days into the new year, 2 trading days into the New Year's. It's consistently 70 some odd percent up. 77% of the time it trends upward by 1 to 2% on the overall indices across the markets. So is that what we're in right now? I don't know. Is it because of the stimulus? Could be.
Yeah.
I almost think I've posed this question before privately. Is the threat or the thought of a stimulus more powerful than the actual stimulus? So having that potential of a $2,000 stimulus out there for months or weeks or however long, is that going to drive the market upward more than if they said tomorrow we have $2,000 stimulus checks that are coming out to people?
Well, we saw. I mean, I think we see it react to it,
Yeah.
as in the same way that we saw Trump with the trade talks.
Yep.
You know, it's the trade's on, the trade's off, the trade's on, the trade's off, and I think we see minor reactions that come from it. I don't think it gets built in overall, like the long term, saying, "Oh, we're gonna get it," because once it actually gets passed, then yeah, I think we get a bump. I don't think it's this. It's gonna just be this until we get a large stimulus that comes through in the trillions again.
Yeah.
I think we just kind of see this general uptick that's going to go through, and then, you know,
Market normalization again at some point in time. That's not
I don't
dependent
think we
upon.
can. I don't think we can ever call this a market normalization anymore. I
Well,
mean,
you can't, because you can't ever truly have an exponential growth. I don't think that's the only ticket for moving forward. Is that you just have to continually have an uptrend.
low interest rates, and you got to print money.
That's-
Because guess what? They can't raise the interest rates now because we have so much debt that you raise the interest rates. What's going to happen? They can't pay it. Who's going to default on it? Like it's like, then that scenario is just not going to happen anyway.
No.
I mean, they'll just print more money. They're just going to devalue the dollar at some point in time, supposedly. But I mean, you see it in the market. So I know you see it. Go to the grocery store. Things cost more than they did 6 months ago. You can tell on that point. But when you look at what actual inflation is, it's
Under
it's under
2%.
2%. I don't think so.
Their
man. It's like-
target point is 2%, and they can't even get close, even when they're printing off $6 trillion.
I feel like my grocery bill's gone up 10%, maybe 15% alone. Like
Yeah.
we keep track of ours in our house pretty consistently throughout, and you can see the uptick. We didn't change much. I mean, come the holidays, obviously there's extra stuff that comes through, but even before then, we saw the stuff was upticking. The prices were going higher. That's inflation. That's what we talk about. How much can I buy with my dollar? And they get this. I'd have to find the post for it, but he ran through. I can't remember who it was either, but he ran through, the idea of what inflation is, like what they put out there, this 2%, that they want to keep it at, or it's here, or they want to be at 3%, whatever it is, this magical number that they say it is, and then what actual inflation is. What was the price of a car, 10 years ago? What was the price of milk? The classic is gallon of milk, right?
Yeah.
A loaf of bread. And that we see a continual incline in the cost. Another big one that he talked about was education.
Yeah.
Education inflation, like that's the largest one that's out there. It's like just unbelievable. You see that out there. So inflation's there, man.
Yeah, the value for what you get for education is a completely different topic. But I would say for 2021, if you're looking at the dead hit of, are we going to get to 2% inflation in 2021? Are we going to get to 3%? I don't see it. I don't see it happening that quick. I think most projections have it put out to
5-10 years.
Yeah, exactly. 2022
Yeah.
at the soonest, potentially getting up to 3%. And that's with all these miraculous measures here of trying to get to that. But yes, buying a house right now. Good luck trying to buy a house. It's ridiculous pricing. Almost every market that you go to, I can't think of what I've heard or read of a marketplace where it is affordable or cheap or lower price than what it was even a year ago.
Puerto Rico,
Maybe.
we're going.
Yeah.
That or Wyoming, right? We got to get our cabin there.
That's right. It's something that, yes, I don't necessarily think that we're going to see the inflation where they want it to in 2021. I think stock prices are going to continually increase across the major indices. I would say as a whole, I would put it in the 10 to 15% range again of growth from the start of 2021 to the end of 2021, 10 to 15% growth. So you're looking at...
What's our overall growth right now? I don't even know what that's at. Like S&P here, we're at 10%.
Well, that's from the high point in February. But
Oh,
if you
yeah.
go from,
I'm sorry. I didn't go back to 20. Let's just go to the beginning here.
so if you look at
15%.
15%. So I would
That's
say...
unbelievable.
You could see, I would say probably in that 10 to 15% range. I think an outlier, if we get a lot of...
Look at that.
I know, it's
Look at
unbelievable.
that. The DAX, so you can see this. 41%. That's with
A
dip
huge...
from the top
We retraced Trump. I mean, that was one of the things
that
when
was
I
the retrace Trump. I remember that. The
yeah,
retrace Trump.
it retraced Trump,
Look
but
at
then
that.
it went all the way up to well above whatever I would have thought it was going to be. I thought we'd be in the tens.
This is unbelievable. Unbelievable. A 90, so from the bottom of March,
Yeah.
94%. We went
And that's
down 32% from
Yep.
that top, up 94% to where we're basically at today. Tomorrow, it's not going to dip.
No.
Even if it dipped like 2%, whatever,
Yeah.
it's still sitting in the 90s.
But what you got to look at, okay, so that's a 32% dip from the top to the bottom.
Yep.
Okay. That was a major, major event.
Yeah.
So how can, with modern monetary policy, how in the future can anybody think that it's going to dip more than 35% in a short-term time frame?
I don't think you do. I think what most people that are fearful of what's going to go on, I agree with you. I don't think it's going to happen. I think you're going to see them step in.
Mm-hmm.
They've already said it. We've got an infinite supply.
Yes.
Okay, great. They're going to print as much money as they ever need.
Yep.
But what is the consequence of that? There's so many theories out there. What's the consequence of that? Consequence. I mean, we say inflation. Well,
Yeah.
their magic inflation number hasn't even moved. Hasn't even budged. So, I mean, they can print 10 times that.
Yeah.
And then maybe we move up. Maybe we get to that 3%.
What's
right?
the only combating factor that you have, or what are some tools that you have to be able to combat the long-term inflationary effects of?
No, I mean, you always have different. I mean, real estate's the first one I come to because you want to look at stuff that's a fixed asset, right? Like it's not going to go anywhere. There's only a certain amount of it. Land, real estate. Precious metals are always a big one that's out there. Obviously, my favorite is just Bitcoin. We can talk about that one later.
I think I would contend that you could also look at securities or just
Oh.
anything across the board, being able to outpace that overall inflation.
Yes.
What I think that you would immediately go to your real estate, your
That's the classics. Those are the
classics
right?
of like precious metals
Yeah.
or whatever along the lines, because that's a tangible asset that you can hold on to, but it's going to just pace.
Yeah.
In my mind, it's more or less going to pace with whatever inflation is. It's not going to far exceed what inflation is.
It hedges you for the dollars
It
because the
does.
dollar is basically what's going to decrease in value, so that you're gonna make more overall. But
Yep.
like we saw here, what's a better investment? Stocks, man. Like I mean, ETFs, get into some good stocks that are out there. I mean, your classics of Apple, Amazon, your FANG stocks, whatever everybody wants to buy into, Tesla. I mean, you can't go wrong. I mean, and you're getting double your money.
And one of our best holdings that we had throughout the year was Fangu. Mine,
Yeah.
personal side, but then on the on our little investment side of things, Fangu. I guess I call it Fangu, but it's
FNGU.
FNGU.
Yeah, here we go.
We entered at $33, and your charts were telling you it was going to go down lower than 33. I looked at 33, and I was like, "Hey, this is the perfect entry point."
Yeah, it was in the same spot. Like this whole turnover that was coming in through here.
Yeah.
We got in at that point. I mean, what are we, 700% up now? And it's
It's-
looking strong.
It's looking really, really strong. And there's been pullbacks. You look along the way, there's huge upswings that happen. There's huge pullbacks that happen. And it's going to continue to happen in that regard. I would say look for those pullbacks. I entered in again with some additional purchases back in the 200 range, just below the 200 range.
I mean, these are what you're talking about.
Yeah.
Because these are 3x leverage. So,
Yeah.
I mean, with leverage comes your risk that you have to be able to hold through these big dips. Because guess what? If you were holding here,
Yeah. I bought there.
you were crapping your pants. You were down 80%.
Yeah.
You're down 80%. How many of you can say, I'm going to put 100 grand in, and then all of a sudden it looks like it's only 20?
Yeah, but
And then say, oh, I'm going to hold on to it. You say that. Not many people can.
No,
not
it's
many
tough.
people. It's the strong hands. It's the shake out of the, who's going to get shaken out.
it goes back to what we were originally talking though about having that conviction or having that confidence overall in that long-term
Right.
holding. Is Apple going to go away? Is Bitcoin going to go? You can draw the parallels across any board. If you bought Bitcoin at the top 20 or 19,000 back in 2017,
Oh,
and now it's at 28,000. So I mean, if you held during that whole time, you're like, oh crap, I look like an idiot. But long term, it all pans out.
always. I mean, for most things.
Well, for most things, yeah. Time's the friend of the investor, but yeah, if
And that's a key difference. Are you an investor
Or are
a
you a trader?
Right. So you're the investor side.
Yeah.
I mean, I will always come to you at that kind of side of it. You invest it like
Yep.
you're long term. I know when it's going to come down. It's long term. I am a trader. Like I look at. I want to be in. I don't want to lose a lot. My whole concept is small gain or small losses, big gains. So if I can keep my losses small, and keep my gains big, things are going to come out well for me in the end. You know, and I've done well with that. I've done really well this year. I did well last year. So as a trader,
But it's really easy to do well in
in a bull market.
a bull market. I mean, that's the whole deal. When it comes down to it, what does it look like in a bear market?
Yeah, but the only thing I say is when I look at where I got out and where I got back in, I mean, I'm looking at a, 20% difference between top and bottom of where I got when I got out and where I got back in because I traded. If I would have held through, I still would have been good, but not as good as I was because I traded out of and got back in, except for those taxes.
Yeah, that's where it comes down to. You always have to weigh out the tax consequence that comes down for short term versus long term in the holdings. And as we come to the end of this year, you got to figure there's going to be people that are going to harvest their losses from this year. Now, I don't know how many losses people are going to have because everything is trending upwards overall.
We got a couple still sitting in there.
We got a couple that are sitting in there.
Couple
not
options that we might close out tomorrow just because.
It's not much, but harvesting some of those losses, it has value during this time. But as far as overall holdings of stuff, if you go beyond into this new year, it'll all pan out. It always seems to.
Yeah.
It's just a matter of how much pain can you take in the short term looking at a number. The best investors are those that are dead, right? That don't do anything.
That's the classic Fidelity one. But here's we talk about the investing side. People will choose that one. They also choose the study. I put that in quotations here. The study of they took traders and they gave them, said, hey, you're going to be a trader for a year, and they threw them into the fire. These were all people that had never traded before. First off, and there were 7 of them. Mm-hmm. So their study consisted of 7 people.
That's a broad market, right?
To trade, and I think it was like 1 out of the 7 made some money, and it wasn't even a lot. It was like he made like $20 or something stupid. So, and not all the rest of them either they stopped, within the first couple months, or they just lost their money throughout. They did horrible.
Yeah.
Of course, you're going to do horrible. There's actual techniques that go into trading to be able to do stuff. And if you're not in the mindset of understanding how you're going to protect your capital and how you're going to create the process for which you're going to trade by, you're not going to be successful.
No,
unless you're lucky.
Which certainly that comes into a lot of what I've done personally is just luck. Some of it's
but
just time.
You create your own luck. Come on, man. You create your own luck. You say that all the time. It's like, okay, not everybody's going to buy in where you did because they're scared. Not everybody's going to be able to take money to put in there at that time frame. It was a scary time frame. We put fresh capital, a lot of fresh capital in.
Yeah.
And how many people are going to do that? So,
no.
Yeah.
You don't go chasing, what is it? Don't go throwing good money after bad or something like that. We didn't throw good money after bad because I don't think that it was a bad investment. And I think you talk to anybody that's a long-term investor, they will say there's some luck that's involved with everything that they do. I mean, Warren Buffett's one of them. He's like, I've just been blessed to be born in a time frame that allows for me to be able to experience such growth and a capital accumulation that is stocks.
Hey.
And that's one thing that we're currently in right now is we are blessed with a time frame that allows for stocks to be such a value. We've talked about it extensively. How valuable is this tool or mechanism to be able to know exactly how much money or you have, not some Zillow estimate on a home that you own or not some bank telling you. You can cash in and get the money from whatever you have at any point in time, know how much it's worth on down the line. And you could see it grow and compound over that time frame. To me, that's more valuable than any of the other investment mechanisms that are out there for real estate or precious metals or whatever else. Now, certainly you can throw crypto into the mix of things, but that's a completely different...
We'll go on to crypto talk on another one because I'll talk a long time on that one. But I did want to go and move on to, because we're going to be short on time here.
Yep.
Let's talk about we have a little yearly competition going with some of the guys from the group. And I say guys not because I'm not including women. All women are allowed. There's just only one on there. I don't even think she's a part of it.
Well, and plus we live in a state where it's not y'all, it's you guys, and so we refer to guys in an all-encompassing type of say vernacular, I should say, however you want to say it.
So why don't you let me know? Let's start from the top of like the first one. We'll just kind of look at what it is. and we don't have to say the name of who picked it, but we'll just look at some of the stuff that they picked.
Okay. So what we have,
I'll start with mine first. I picked ships because I knew that one for sure.
Yep.
Or just ship. It should be.
Ship.
Sorry.
Yep.
I was debating between tops and ship.
Yeah,
So
you'd played with tops a little bit earlier this year. So.
yeah, and top and ships they're identical. They're like Burger King, McDonald's kind of, when you think about it. So for me, I was looking at something that was highly depressed over this time frame.
Yep.
I look at the 50-day, 200-day a lot, and I was looking when I was going through stuff. I use FinViz.
Yep.
And so I was like, okay, what's below the 200-day moving average? And this was 80% below the 200-day moving average.
Yep.
So, okay, great. That gives me a good start point. So I looked through a bunch of them. I had
Yeah.
a big list here that I like to look at that first,
Yep.
so I know what's going into. And then I wanted to see, just from my first initial, what was coming into play with the technicals, right? And
Yeah.
so then I went on the technicals. I'm a technical guy.
Yep.
And then I found a couple of them that looked really well with me, and I was choosing between ship and tops because they looked exactly the same, almost to a T. A little different price point, a little different market cap, but really close. And then from there, I looked at the fundamentals. Okay, well, what's going on with these guys? Why are they so depressed? What's happening? And obviously with trade talks is one of the huge ones. China's shut down, so we're not getting as much shipment that's going on there. And it's been throughout the world, not just with the U.S. I mean, I know Europe was going through some of the stuff, and
It's everywhere.
Everywhere. I don't know how well it's going to be, but I'm kind of playing the encouragement of the new administration coming in and potentially opening up some of those talks to get it going again. At some point in time, it will. I also found a lot of different funds that were actually putting tops and ship into their funds for the same reason, that
Yeah.
they're looking at the potential of these trade talks opening back up, increasing trade, which in turn is going to raise the, a rising tide raises all ships,
Yeah.
right? So
Hey,
I would pick a ship.
It's right there.
So that was kind of my choice on that one. We'll see if I win.
Yeah, it's always tough to say as far as extending out because they've been highly depressed based off of the existing COVID structure that they're in. Long term, what is their debt structure going to look like as they try to emerge from this? Are they receiving any type of benefit or aid as it moves forward? Who's going to know? The best guesstimate is based off of the technical analysis that you do on these charts here, looking at past indicators of, hey, it's a strong company. It's not like that strong or infrastructure is going to go away. Once they get let back into the wild, more or less, they're going to emerge as somebody that is strong. I would venture to say it's just a matter on how they can weather the storm, since it's a shipping company, weather the storm more or less of what we've been dealt or what they've been dealt in this short-term time frame.
I'm going to pause it right here. Hold on one second. So we have a few other ones. How many did we get all overall?
The ones that I had, there was a total of 8 that I had tracked. I think there's probably one or two more that got submitted afterwards. But it wasn't on the actual the Venue Venture thing. I know for me, I looked at BXRX, and I probably did I haven't really looked at buying any of the small caps or anything along those lines in a decent little bit of time, but the chart looks somewhat similar to what you had there up for ship. But what I did, looked on FinViz as well. I wanted to find something that was close to within 10% of the bottom of their year or their 52-week price. Mm-hmm. So within 10% of that, I had to drop more than 80% overall for the year. And then just kind of read up a little bit on what the overall company does. What did their recent financials look like? Just kind of gathering some background, detailed information. Is it an area that could grow? And for me, I always look at pharmaceuticals as being something. It's kind of like tech, but just a little tick under tech as far as overall growth potential. Pharmaceuticals can take off pretty rapidly in my mind. And so what this one had that interested me, at least from what I remember reading, and it was briefly that I did some research on this before I purchased. It was based on, it was a non-opioid pain medication for treatments across a broad scale, but they have already in phase 3 trials and phase 3B trials for treatment of different types of pain related to cancers, and approvals for that are forthcoming. They're also seeing that they're quarterly revenue is starting to be generated, but then also growth potential is out there. It's one that analysts are projecting for $8 or $9 total purchase or total price here in the near future. I don't know. The reason why I look at it as being that gap that was on the charts there has to deal with the fact that they just recently released another $12 million worth of stock. I feel like that's to help with their debt, more or less. You release that, it gives them some capital to be able to do a couple different things. I don't know if it's potential future marketing that they're going to need for getting their product out to the masses and demanded amongst people, general population of people, or distribution. More or less, though, it's a gamble. As with anything, is it going to be the next biggest thing in the short term? Probably not. But I've got a year. So got a year. Could it swing mid-year? Yeah. Could it swing end of the year? Yeah. Could it swing start of the year? I don't know.
I think we're gonna know on yours by the beginning of the year which way it's gonna go.
Yeah.
Just with it's kind of flat, but I mean it's descending wedge ultimately, which is bullish on a downtrend here. So I imagine we'll see a little breakout here of this descending triangle heading up. Obviously, you got your resistance at the cloud, but I think if it breaks up, I think it'll consolidate a little bit here at the bottom, and then we see some good move up. I mean, that's kind of what it looks like there. We'll see. I like it. I think we should try and have every one of the guys on the podcast just to chat. I mean, they all have their own insights. We should have them on here, and then they can tell us about their pick.
Yeah, because I think it's not really fair for us to evaluate their picks without them here.
I mean, we can, obviously,
but it's biased because we want ours to win. But I think it's kind of interesting that you and I both went to the same general place of FinViz to kind of gather some information based off of what's out there. Because I don't consider myself a trader. I don't keep up to date with what's this thing doing? But if I was looking for a purchase of an individual stock that's not ETF, that's not leveraged, that's not whatever, which I don't generally do. I don't generally purchase stocks. I think I have Big Five was one that I ended up buying.
Smile Direct Club, Chewy.
Smile Direct Club, Chewy.
You got your Apple, your Amazon.
I don't have Apple. I don't have Amazon. I don't have any of those.
What?
Yeah, I dumped those. So that was a part of what the 2020.
How do you consider yourself an investor and you don't own Apple or Amazon?
I look at
Apple.
Do
you make money?
So Apple and Amazon, for me, make the most amount of money when they are in a 3X fund, which if you look at a lot of the 3X funds that I'm currently in, that is what they provide the most growth. So why get 10% growth of holding the individual stock when I can get 30% growth of having it in a holding that's going to be spread amongst a lot of the other ones as well.
I was messing with you.
No, I know.
Hey,
but that's my justification for it as well.
Hey, I love it. I'm going to end on one thing just because I had to see the price here. We jumped above 29. About 29. But
you said 30 by the end of the year, right?
No, I said we wouldn't hit 30 by the end of the year. I didn't think. I actually got stopped out on a short today. Not a big deal, whatever. I gotta hedge myself because it was playing with that resistance the resistance at the top there, but we broke through it. Yeah, I'm happy overall. Like I said, stopped out, not sad, but I wanted to just kind of go over this chart I posted on the Discord. It's just a yearly chart. It's fun to do, fun to look at. I took the bars from the 2017-18, rise up and downtrend and just put it, right here. Watching it retest the 20K range. That's if it went down from 29 to 20K to retest that. Yeah. That's a pretty big dip.
And you'd have a lot of institutional places that would buy.
Oh, my God. There's so many institutions. But look at that. If it ran that same thing, 500K.
Yeah.
Per Bitcoin this year. Yeah. Okay. I'll take it.
You might take the short-term tax on that. Although you're long-term on all of your individual Bitcoin holdings anyway.
Oh, I bought a bunch of new stuff in October. Mm-hmm. So,
yeah.
I got to wait till October.
Well, there you go.
But, hey. Yeah. But we'll just kind of look at it here. Yep, broke out. Looks nice. Let's see where it goes. Is it going to hit 30K? It's going to stop short. We got till tomorrow at 4 o'clock is the close for Bitcoin.
It could do it. It's shown that it can.
I want to be right, so I don't want it to hit. But either way we go, man.
Either way, you're a winner, right?
Either way, I'm a winner.
It's like betting on your team to lose or win. You put it out there, and you're basically you're a winner either way because your entry points. Goes back to that original idea of the entry points of where you're at allow for long-term holding based off of whatever this does. It could go up, down 3-4%. heck, Bitcoin could probably go down 20, 30, 40%, and you're still not budging on your overall holdings. As far as like, you're not going to sell your coins, or your little miner coins.
Not yet.
Not yet.
Yeah. If it hits 500K, I'm selling some. I'll tell you that right now. But hey, it was a good one today. We'll be back next week. We got a lot of other stuff we want to talk about, and thanks for the 1 or 2 listeners that'll be on there.
Yeah.
All right, guys.